Good afternoon, Scott Redler, TV Live. Welcome to today's recap. So I guess today was somewhat of an inside day. You had the spiders above yesterday's low. You had the spiders high of the day below yesterday's high. So what does that equate? An inside day. Another day in the life. Another day in the life where you had if you were looking for cash flow, be very price specific and stock specific. Because some things you looked for momentum, you didn't get it. And some things, when you weren't looking for, it just continued. So with that said, I'm just going to get right into it. You look at the chart of the spiders, you will see, hovering here near the highs, just, above the 8-day moving average, consolidating again. Every tick down, I feel like every sales trader, IMs me and says, oh, this is it. But meanwhile, look where we are. As far as the year is concerned, here's your gap up, little consolidation, pushed higher, consolidation, the stair step approach through 1474. A continuation, and then I guess rightly so. Why shouldn't we have a few red days within a range after a big move that we've seen since the start of the year, and even a big move that we've seen since the red dog reversal down here in November 16th? So it's paid to have a portfolio approach, which we've talked about, and I think my average positions have been like anywhere from 8 to maybe 15 right around here, and now I think I'm somewhere around 8 to 10. But I guess what's frustrating is, I know for me, that's been trying to be long, which I have been the majority of this move. My stock selection has been okay, but hasn't been great. Historically, I like to trade Apple a lot. I tend to like to be from the long side, and which has been good for the past 3-4 years until we hit that 700 high. And I did get out of the way, and I didn't really lose money in it on the way down, but I feel like I haven't made enough as far as being short. And on the way down, there was a bit more, bounce type action. And then finally, today I thought perhaps we'd get a juicy trade. We wanted a juicy trade. And you had to be almost perfect to make a juicy trade. All right, anyway, I love these metaphors. Yesterday we had our first potent up day in Apple, and I said, if we could get a down open and we hold higher, it'll probably be better to perhaps get more size for a break above. What level was I talking about? I think 459.75, and once we got above it, the magnet would be the gap. And then it would have been nice if we got through the gap, held it, and continued higher, and then we would have had a nice 2-day trade with commitment. Instead, you look at the chart of Apple, and it didn't happen. Okay, you had a move, but it wasn't like a really big move or something to write home about. This is a bear move to write home about all the way down. Within this move, we've had a few little areas to get long and short. This was like the last really nice long that you could have had within this downtrend if you were searching for one. We had your red dog reversal, you had some commitment, or appetite from there, went sideways, continued, and then this is when we broke in, again, became a monotonous, choppy, even trying to be short hasn't been easy in this range. If you got short on earnings, congratulations, or if you took a put spread, whatever it was. But now here we are in this lower range. So finally, just to give you a little bit of a micromanage here, you'll see that. Let's get it up. Come on. This was yesterday, right? Yesterday, we engulfed these 2 days. It was a nice methodical trade that closed on the high. So I think a lot of us did pretty well with that and took some home. So today we talked about commitment. I said, 454 would be a nice area to hold, or the line in the sand would be 451. It went as low as 452.58. And then it did give you a nice trade above yesterday's high. This is why I had this as the trigger. Okay, I had 459.74 as the trigger, which it tried it in the first few minutes, but failed, wasn't ready. And then it regrouped with whatever was going on out there. People were saying, stock buyback, increased dividend, blah, blah, blah. Anyway, it pushed through, went to 465.73. It nudged through, and then just came back in. Now, I guess you could say, as long as it stays above today's low moving forward, maybe this will be another attempt in the future to get in the gap. But for me, I'm going to take a step back approach again, as I would have liked it to be better. I'm not long overnight. It goes ex-dividend. Look at the 5-minute chart just to see how, maybe you could have traded a little bit different. Here, just, take a quick snapshot to see how it opened, okay? Here was, okay, let's see. All right, let me see, where was today's open? Okay, yesterday's close was right here, right? This was yesterday's close. No, actually, where am I right now? I'm like a little lost. Okay. All right, here we go. No, this is a few days back. Sorry. Okay, so here was yesterday. Okay, and okay, now I see where we are. This was the run that we had yesterday off the lows to right around the highs. Okay, right around 457. And then what I wanted to do is measure the commitment to yesterday. That's why I came up with some areas that we could hold. So if you look real quickly at these fib retracements, we held the 0.382% retracement, which is probably the last line of defense you wanted to hold in order to keep some pent-up momentum for what could have been an explosive move. Okay, so go back here. That's how we came up with it. We wanted to see, the top third of this move yesterday hold, and that's what happened. It tried to go through in the beginning, rejected the previous day's high, came in, tested it, but then what happened was, you had a really nice move, but you really had to be very prepared for it. Okay, this was your area to add, and if you come back to me, I remember, I was in the trade because I was in it overnight, and I was like, oh, good, am I gonna have to hit this out? And then all of a sudden, I saw the flutter, in the level 2, and then all of a sudden, you see in a few of the different, services out there talk about buyback, talk about this, talk about that, and it almost went positive, and that's when I, got a little bit more aggressive. And then knowing that if we got through 460, above yesterday's high, some shorts would get squeezed, and perhaps we get to that 465-ish, which could be a really nice breakout trade if it had continuation. But then it didn't. You go to the chart here, and this is when, I added a lot more, and I also added over here too, and I lost a little bit. So thank goodness it gave us another chance to add. And then it even went through 462, and then what happened is you had to see commitment. Okay, here is, a pretty high level flag. And then, I said, let's even give it a little bit more the benefit of the doubt here, because I tweeted, I said, if we could stay above 462 to 465, chances are we could, see another move higher. Okay, but what happened? You had your pole. It tried to flag here. It would have been really nice to keep that pent-up momentum there and trade above the 466.50 for a earnings gap fill, for follow-through, for excitement. But what happened is went sideways, 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 and did what Apple's been doing since pretty much the breakdown from 700 is there was no commitment, and it just kind of dribbled down and failed. And right here, I got out of some, I put a stop in, went to the gym, and my stop was right below this flag, right around 460 or 459.5. Got out of it, and then that was that. So now today, I probably just spent too much time on Apple because Apple doesn't deserve it right now. But that's how I handled today. Came in long, tried a little bit off the open, it didn't work, then I stayed with it, and then I came back this time, figured it would go this time, added. I actually sold a little bit into the resistance area because I wasn't sure if I was going to get through it and get you a nice move to test the 21-day or get to this pivot here, 483, and it didn't happen. So we'll see what happens if it holds higher the next few days. And again, it really isn't my focus these days because there's other things out there moving around. If you look at Google real quickly, it's pretty interesting that you've had 3 downgrades in the last week or so, and it's held above the 8-day close near the highs. I did get long some. If it gets above 776.60, you could see historic highs. You look at the macro pattern here, there is absolutely nothing to the left. This will be all-time highs holding in there, so it looks pretty good. Amazon, I would say be a little careful. Amazon, ever since earnings, we talked about that 284 that wound up being big resistance. Some guys got short there. If that was you, congratulations. Now you have this lower pivot. So this is your bear flag, right? Somewhat. Here's your pole. Here's your flag. If it starts breaking below 260, you could see more downside action, considering that the PE is through the roof and you have faulty action after earnings. So if that's you, a lot of guys have been trying to get a short trade here. This was your first opportunity, and now it seems as if if it wants to break to the downside, there you go. So those of you looking to do so, see what happens. If it hangs out in here and then breaks above this little area, then I guess it's back in this range, and it just took the time. So either which way, here's your lower wedge type pattern for resolution. Then you take a bull flag and you flip it over. Look at Netflix. This is a great spot for momentum. Guys on the floor were talking about it. Some made some nice money yesterday. It couldn't get through this area with authority. Today it did. We talked about the potential of this thing filling its gap all the way to 198. which comes in right around here. Look at that. That's actually like 195, 200. Really nice move. A lot of people don't understand it. Don't try and understand what you don't know. This is a mechanical move. Lots of shorts stuck in here. And just look at the technicals. Perfect scenario. Gap up. Couldn't get filled after earnings. Could have bought it above the earnings day high. Big move, consolidation, and then pow. It's just a textbook technical pattern. Though take Netflix out of the picture, just watch the price action, get used to it. There's movement there. It's good to have Netflix back in the mix. As far as IBM, yesterday it closed pretty weak. I know Evan was on top of that. He took it out short. Today it gapped down, and now it's in this earnings gap. So this is different. Whenever you have a big gap up after earnings, you want to see if it could hold that gap up to see if the momentum stays. And right now, you had a gap down. It did come off the low. See if it could fill this gap for some cash flow tomorrow. Who knows? As far as the financials, still acting well. I drew this little pennant right here to see which way it would resolve, so to speak. And could have been to the up or to the downside. And right now it seems like it's continuing to the upside. So with that said, didn't test it 21-day. And here we are. You look at some patterns here. Citigroup looks really tight. Looks like it's ready to go again for a tack on play. Here you go, above the 8-day. Looking tight. This was a nice core trade down here. Nice little tack on cash flow trade right there. And here you are again. Here's a gap. Boom, boom, boom. Looks like it's ready to go. I would not take tremendous size into a new high trade, but it's something to do if it breaks above and the market wants to continue. Bank of America still looking good. This was the descending channel, the last pattern we had that broke above, held, and now it looks good once again. So at this particular point, closed near the highs of the day. If this were to take out 1220, it can continue also. Goldman Sachs, best in breed. How are you? Following the 8-day. Not even thinking about moving lower. Here, I think Laz was in here saying maybe it could happen to test the 8 to 21-day, and it didn't. So, riding the 8-day is something hard to buy, but, definitely not something just to lean on short. And it did close, I think, at, yearly highs right there. As far as gold and silver, doesn't get much tighter than this. Okay, it's very, very tight, but it also doesn't mean it's going to break to the upside. So we'll see what happens here. Here's a very, very tight pattern. And at some particular point, it's going to have to give, unless it's in a 20-cent range tomorrow. So if you want to look for a resolution, here you go. Here's 163 on volume if it wants to go. Or if it wants to start breaking below this low here, which was 160, 133, I'll be out of the way because who knows? Maybe it goes to the downside. At this particular point, you could be cheating one way, but it's you got to be a bit careful. I'm cheating a little bit to the long side, but we shall see. Silver, same thing. Very, very tight. Doesn't get much tighter than this. So whichever way you're thinking, wait for either some type of resolution on heavy volume or be in a little bit just in case you think it's going to gap up or gap down. So I'm in a little bit long, and if it gaps down, I'll have to salvage and get out of the way. If it gaps up, I'll have some, and then I could hopefully be a buyer if it could finally hold above 31 for a move. Facebook, still in this range. It held where like this prior breakout right over here. Okay, a little bit of a bounce, tried to fill this gap. This still needs time. Okay, LinkedIn had a nice move. I'm fully in my call spread now on the other end. I love this weekly pattern. I kind of think that this has 145 or 140 all over it, near the highs, tight float, been public not even 2 years. Had some reports that showed growth, that got treated well. So, this kind of has a Netflix, a la Netflix type of ingredient to it. I did a call spread, so this way, the premiums are high. I think I bought the 125s and sold the 135s, and my net cost is like 2.5, so I'm risking 2.5 to maybe make 7. So it's almost a triple, so to speak. And then I kept a few naked just in case it does something really crazy. We shall see. And then Triple D. Okay, smart management. Stock's been on a 2-year run. Extreme dips have been buyable, momentum's been there, and then they came out with the 3-for-2 stock split. Everyone says, oh, Red Dog, you always talk about stock splits, and it does nothing for the shareholders, does nothing to the market cap, does nothing for this. But you know what? It does for psychology. If you remember, 3 months ago or so when Apple was at 600, I'm like, Tim Cook, split your damn stock before the street does. You have no more buyers at this area, whether it's hedge funds, institutions, it's saturated. Maybe if you split it 4 or 5 for 1, some people say, oh, Apple's 150, I'll go out and buy it. So now it still can't be viewed as a value stock if it's at 455 because people psychologically, whatever, they don't deal with it correctly. So lo and behold, Triple D, announced a 3 for 2. So this way, maybe it doesn't continue higher and become like a blimp in the sky. And and then all of a sudden it'll split, and then it'll probably get back here at some time. Remember Baidu with their 10 for 1? Baidu would not have been $100 and something. That means 1,000 if it was there, whatever. So anyway, Triple D, nice move. You go to the daily chart. He was a red dog reversal, not really that clean after a big down move. I talked about, I think in what was it the stock Twitch show, or it could have been in my mentoring class yesterday. I talked to somebody saying if it gets above this, it could be really positive for the stock because it negates the power of this. And here you go, SSYS in that group, turning higher. Every time it seems like it gets moved to the downside, it regroups and goes downside, goes. This one doesn't seem like, why not? I guess they should follow suit and come up with some kind of stocks, but perhaps maybe a 3 for 1. Then I think tomorrow, tune in because there's a new issue in this sector coming out. So typically when you have a sector that has given a lot of gains over the course of the past few years, you get a new issue. Sometimes there's opportunity there, and I know Sperling usually trades the new issues very well. I try and do it. I'm not that great at it. I have the art of trading, an IPO, which I'll go over tomorrow in the morning call. And lo and behold, markets, today in stride, holding higher, very specific. Only select follow through in certain areas. If you're frustrated, pull back a little bit. If you're frustrated, try and dig in why. Are you just shorting, this move? Are you adding at highs and hitting it out on a pullback? Are you in the wrong sector? Do you have too much size? You have too many positions? Figure out what you're doing wrong because it's only February. We have a long year ahead of us, and start feeling better, put some green days on the board, and as soon as you have some green days, you feel more positive, and then that's what starts to build, and then you get back to the way you want to be trading. So what's today? Today's Wednesday. I'll see you tomorrow. It'll be Thursday. Have a great night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.